Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report heading into the month of June. And just reviewing May, look, it's been a pretty standout month. We've had a very solid rebound in global equity markets. The MSCI All Country World Index returning 5.6%. The US market, I should say, outperforming. That was up 6.3%. The Australian market up 4.2%. So I think what we've seen is that with the equity market sell-off in earlier months, on the back of US Trump tariff concerns, the US market underperformed. And now, with an easing of tariff concerns, Donald Trump pulling back on some of his threats, we've had the rebound in markets, and the US market has resumed its outperformance. So the main story really has been the concerns about tariffs in the United States potentially causing the US to go into a recession have eased. Donald Trump announced on April 2, famously Liberation Day, a very extensive set of tariffs around the world. Markets, fell sharply for several days. They bottomed on April 8 as he announced a postponement of those tariff increases. And really, it's the markets have been rallying pretty strongly since that bottom in early April. As I mentioned, also interesting that the US has resumed its outperformance. Technology sector globally also continuing to do quite well. In terms of Australia, look, the big story has been the RBA did follow through with the widely expected interest rate cut at the May policy meeting. That followed the March quarter CPI that did show that underlying inflation had ticked back down into the Reserve Bank's 2 to 3% target band. And I think another surprise from that meeting was the RBA seemed to be pretty open-minded about cutting interest rates further this year as inflation continued to ease closer to the midpoint of the target band. I think many in the markets were thinking the RBA might cut, but then push back on the idea of more rate cuts to come this year. So that was certainly a pleasing development for markets as well. One new factor to emerge, I think, in recent weeks, along with the tariffs, has been concerns around the US budget deficit. The House of Representatives passed a budget bill basically extending tax cuts that Trump provided in his first term, along with a few other cuts, which added something like $3 to $4 trillion to the US prospective debt over the next decade. Now, there's been some rumbles in bond markets. EU bond yields have moved somewhat higher, but it's at this stage we certainly haven't seen a bond market meltdown of a size that might have implications for the equity market as well. So it's a new risk factor that we're watching, but at this stage, it's one of those known unknowns. We just never quite know when and if the bond market is going to sell off. In terms of the outlook, it's still critically around the tariff outlook in the United States. Will Donald Trump press ahead with very large tariff increases on major trading partners? Most investors see this as an own goal for the US. It will put upward pressure on US inflation and downward pressure on US economic activity. So it's not a good thing for the US economy in the short run, at least. And I think, ultimately, my judgment is Donald Trump won't do that. He will pull back. Hopefully, a lot of what he's talking about is just a negotiating tactic. And so if we do pull back and we get relatively small increase in tariffs, then markets can, continue to grind higher. In terms of Australia, also, I think the trend is for inflation to continue to ease. I'm still expecting the RBA to cut interest rates at least twice more this year. Maybe not in July, but probably wait for the next quarterly CPI at the end of July and then maybe move again in August. That's pretty much it for me for now. Thanks for watching. If you'd like to see full details of my market trends report, visit the insight section of our website, and I'll see you again next month.